everyone. Good afternoon, good evening, wherever you are. It is The Seed. We are back, Mads, myself, and today we have Andreas, who is a Dane, a dear friend, a fit freak dad, a creator turned angel LP, and the founder of EU VC. You've probably seen him around before. That's Europe's community for venture insiders. Andreas hosts the European VC podcast. He's a venture partner with Isomer and an active angel in various European early stage funds, but mostly he's an all-round good guy and we love him dearly. Welcome to the show, Andreas. How are you this morning?
Thanks a million, Dan, for the invitation. I'm just happy to finally be on the other side of the table, enjoying you shining and being able to say a bit about what I think about what's happening in the world. It's a good morning. It's super rainy in Denmark as always. We've had the worst summer, I think, in centuries.
Right.
So I'm happy to just be back at work.
Well, welcome. We've got a whole bunch of stuff to go through. Before we kick off, for those who don't know Mads or myself, we're from Superseed. We invest very early in very technical teams who are solving really difficult business problems and then help them build awesome businesses. So that's what we're about. Andreas, welcome. Let's crack on. Now, Mads, you're first up. So Nvidia is down 900 billion. It's only nine. It's like pocket change. 900 billion. What's happening?
That's
What's
nuts.
happening in the US? Is this recession signaling? What's cooking?
Yeah, US and the world, we've seen markets really gyrating over the last week. Background is that the US consumer spending is the behemoth of behemoths. By some measures, US consumer spending alone is 1/6 of global GDP. It's such a staggering just size, you just can't quite get your head around it. It's more than the entirety of the EU's GDP, the US consumer alone. And so if the US enters a recession, US consumers will spend less. It'll impact everybody. So everybody is nervous. And what we've seen over the last couple of weeks is we've seen weaker than hoped for US jobs reports. We've seen a slight softening outlook for corporate earnings. JP Morgan said earlier this week that they saw a 35% chance of recession before the end of this year and 45% before the end of 2025. So some nervousness in the ranks. What's easy to forget, of course, is that a 35% chance of recession also means that there is a 65% chance of no recession. And so that would be a great outcome, I think, given the rate hikes we've seen and what the economy has been through. And there's clear risk ahead. But it would be remarkable if we can get through where we are right now, where we've been with no US recession. And so there are lower rates on the horizon that could stimulate the next phase of growth. And so particularly yesterday, US markets rebounded again. We had the NASDAQ up 3%. We had NVIDIA back up 6%. And so as usual, markets are moving between fear and greed, trying to figure out which way things are going. So day to day, you could say markets may not affect us that much in venture. We're not on a daily mark-to-market basis, but a US recession certainly would affect the global economy at large. So we do pay attention to this stuff. I think it's too early to say exactly where the economy is going to go from here. It could go either way. So kind of watch this show closely and remember the popcorn.
Yeah. And Andreas, you've been listening to Bill and Brad. What's your reflection on this?
Yeah, so I just wanted to add in that I think that they did a 90-minute or so analysis of this, what's really causing it and so on. The big takeaway for me is, first of all, Brad has pulled back significantly. They've taken off a lot of chips from the public markets during the summer here. So that's always for someone who follows people, that might be an interesting cue to take. And of course, many others have taken chips off the table as we walk into a vacation time where there's also volatility. That's not something that you like too much. And of course, the cost, as you said, Maz, is also that we have an election, we have tax cuts that we don't know whether they're going to be extended or not. It depends on the election. We have an AI air pocket, which is kind of very much tied to what you said with NVIDIA, where we don't know exactly where AI is going to head in the coming time in terms of how the market will actually evaluate the actual, how should I put this, sustainability of the increasing valuations that we have had in this space. Then we have the economic slowdown that you described, and all of that is just one big mix that allows anyone to think, okay, I probably should take some chips off the table right now. But big shout out to Bill and Brad with their podcast. They do great analyses. They've kind of become the counter position to the All In podcast, which even though they're super close friends, right? The All In has gone all in on politics. Very rarely do Bill and Brad talk politics, and when they do, it's a shorter part of the segment.
And
So
this is
they've kind of
BG2, right?
filled, I think, a spot for many.
What's the podcast called, Andreas?
Sorry, Dan?
What's the pod called?
It's called BG2. So Bill
BG2.
Gurley, Brad Gerstner, both of them with a B and a G. So for that reason, BG2.
Interesting. I love listening to Bill
They
Gurley.
dive.
Well, it's BG squared, isn't it?
BG Square.
Yeah, well, I don't know exactly because sometimes they write it as it's squared, and sometimes it's just two as a big two. So I don't really know how they.
It was funny.
how
It was
they
funny
cue it up.
watching. Somebody wrote a big analysis on Warren Buffett, who said he was going along on Apple and then selling half his shares, which was like I think he made like a 47 billion profit in the whatever 8 years of hold time,
Yeah.
but that was a massive chunk, massive sell off. So I wonder how this disruption leads into our next point, Andreas. This is one from you. So raising capital internationally. It's obviously as
Yeah, so
our
this
investors,
is
our LPs in European venture look at public markets. I wonder how they're going to get the jitters and what's going to go into venture and what's going to be taken back off the table down at our level. So Andreas, what was on your mind when you were thinking about raising internationally?
Yeah, I actually wanted to take this in a bit of a different direction because my big question to you is I know you've been in Singapore, I know you've been around the world racing for Super Seed. So I'm curious to hear what are you hearing from the international LPs when they think about Europe, and I'm of course also curious about this because we're about to put together our delegation to GITEX in Dubai. So for that reason, like this is where my mind is at a bit. What do people walk into
Yeah.
when they go to GITEX? Because we're of course gonna bring together the group that we're bringing there for a pre-session where we're gonna talk a bit about what should you expect, how do you actually manage a diligent or a good successful race in the region, what should you do and absolutely not do. So for that reason, I was curious to hear what you've kind of heard from your international conversations
Yeah, and I think
slash in the
this
non-European.
very much reflects on startups raising internationally. Obviously, a lot of European startups end up raising, selling, exiting in the States as an example. So I think there's a duopoly here. But Mads, you've been in the States recently. You've been over in Singers as well. Do you have a reflection on this?
Yeah, so I think in the US there's still an overhang from 2022 where so many investors got overextended into, we would call it venture broadly, but it was sort of really a mixture of venture, growth, pre-IPO, all sorts, and the billions were flowing, and things have been marked down, and many people won't see those funds again. It will not have great returns, and so that hangover you're feeling, and people are sensing it. I'd say you were talking about the Gulf, you talked about the Middle East, Andreas. I think the Middle East and in my experience, the Far East are very different in terms of racing. I'd say Middle East more difficult to penetrate. There's a very strong gravitation towards the US and still a pretty big focus on the big US brand names. I'd say Asia, there's a lot of new money. Many people are interested in venture as an asset class. Europe is a bit of a curiosum because, if you're in Hong Kong or Singapore, I mean, you've got it's kind of Europe is one way, the US is the other way, and there's been again a natural gravitation towards the US, and many folks have just not come around to look at Europe at all. So it's just even putting Europe on the map and sort of saying, look, there's great opportunities here, amazing talent, better valuations, not nearly as competitive in terms of winning deals, and therefore you can get access to much better investment opportunities. I think that's something that people are really interested in and curious about. So yeah, I would say that's probably one of the one of the good opportunities right now in terms of raising capital.
I think the only things I would add, and they kind of reflect on what Mads was saying, was the American conversations I've had with LPs over there. It's almost been a bit of an educator. It's almost a little bit like a venture isn't on the map for a lot of them. I was at a conference recently where everybody was doing property, PE, hedge, crypto, other. So it was quite difficult to even have a venture conversation. But when you talk about Europe, and you can talk about things like the arbitrage opportunity, uh, the R&D science, the technical founders, the resourcing opportunity, there was a little bit of an educator, and then there was almost a lights on moment for some of them that were even remotely interested in venture. Went, that's really interesting, and further conversations to be had. So I think the American ecosystem seems to be quite insular, and not many look across the pond for the obvious reasons. And in the Middle East, the main lesson reflection I have working over there is that there is a massive relationship play. And I know it's a pretty obvious cheeseball thing to say, but it seems to be quite an extended relationship play where it takes longer to get to know people, and the relationships have to be deeper before there's any form of commercial or investment conversation. But Singapore felt fresher to me, felt more opportunistic, felt a bit more intrigue about venture and about Europe as directions. So they're my reflections.
If I should just add on the Middle East part, because I do have a bit of a different take there, which is, or at least a part of the cause, I think, for the relationship, or huge emphasis put on relationship slash non-transactional acting by GPs that come to raise, is probably also very much driven by the fact that they are so heavily bombarded by VCs from all over the world coming to raise there. So
Yeah.
for that reason, you're very quickly, you obviously become a bit more, hands up to to ensure that you don't just get into a relationship that where the other party tells you whatever they think that you want to hear. So that's the one thing I'd say. There's definitely
But don't you think, Andreas, that everybody's a bit fatigued with fundraising, as in LPs are bombarded regardless?
Certainly, I do think that that region is probably a bit more than others.
Right.
But yes, this is the exact thing that is venture's problem when we're raising from people. That's also what you probably experienced in the US when you were with a group of LPs that normally don't do VC. VC is just such a small part in their allocation strategy that they don't really think about it. And it's very hard to then, in a market where it's not even interesting and sexy, make them think about it. So for that reason, it's very hard to get LPs that are not knee deep in venture all the time or dedicated to venture to really pay attention.
We get some reports from what LP's interest looks like, and it's very unusual to see documented that they have more than 5, maybe 10% allocation to VC. Sometimes it's like 1-2%. It's quite a common figure you see in these reports. So it's not only are they bombarded, but it's never really. It's almost like an afterthought. I think venture capital, which is unusual, really, because it's just a high performing asset class. Anywho, I'm biased. Andreas,
Could I just add a note to it, right? Because it's not a high performing asset class if you don't know how to pick, especially not if the people that are pitching you are the small firms, the emerging managers, because fact of the matter is that most will not do well, right?
Yep.
And if you don't spend any time diligencing a VC, then you have no chance of picking them. And for that reason, I would say for many LPs, I would say do a fund of fund, or do the big firms and try and get access to the bigger firms where you, just because their portfolio is so big and because it's late stage, you have more of a diversification already in there. And I know that the venture ecosystem will probably hate me for saying this, or many think, Andreas, you're not talking our book here, but it's just, I don't think we're not well off taking LP money that is not sophisticated enough to actually write the check, because that's then where we get this constant situation of LPs coming into venture. Then they realize that they didn't get what they had expected from it because they weren't able to diligence properly. And then they retract from venture, and the next 10 years when other good VCs come to them and pitch for money, they say, no, venture, I've tried that. Never works, never gonna do that again.
We hear
And
that
then
a
the
lot.
next time we're seeing a hype cycle. Yeah, exactly. And that is why I actually think that we would do well to to maybe not pitch as hard on LPs that don't know about venture, but rather say, okay, you've never done venture before. It's a very good idea that you then think about doing some of the brand names that have been around forever. They're not going to give you massive alpha because they're just going to give you 2x, probably in that neighborhood, or do a fund of fund. That's also what they're going to do. Learn the game, learn what it's about. And then when you really know what it's about, then we should talk again. Or I'll take a small ticket. If you want to do 5 million in total or 2 million in total, let me take 200K. So we built the relationship, but I don't want to take too much because I do think that you should know about venture first.
Andreas, you're obviously talking Isima's book there, and fair game to you. Do you know that in many ways I
No,
agree.
no.
The point is that venture in Europe is still a cottage industry. It's still very underdeveloped. And if you look at the fund to fund scene, it is tiny. I mean, the number of fund to funds in Europe is just it's so small. It couldn't sustain 1% of the kind of the capital that we need. So managers are not left with much choice. I mean, there's government money, and there is direct to the family offices and other allocators. The fund of funds are just they have too small a capital base to
Yeah, we
provide
have
the capital we need. So you
in,
either
in
need
fund
to
of funds that are
radically
dedicated.
grow the fund of funds industry, I've seen massively very quickly, or you need to find other ways to go. And there's kind of a related point to this, which is I think many folks have been looking at, and many investors and allocators have been looking at, what is an efficient way to invest. They've been trained on fees, and fees has been extremely important to create performance over time. Because if you think of what you can get in an S&P 500 tracker, and if you pay 2% fee per annum on that, well, that's a massive part of your performance. But of course, when you look at higher returns asset classes, that becomes a completely different calculation. If I'm targeting 25 to 30% a year, if I pay another 0.5% or 0.7% to fund of funds, well, it really doesn't matter. That's not the thing that's going to move my performance. And so I think there is a complete sort of re-education of how to think about fees in the light of some of these asset classes, and actually, think about fund of funds as something that can be a really, really valuable instrument in helping you find the right allocation and getting enough diversification. And yeah, it's going to cost you a bit in fees, but overall, when you look at the performance you're going to get, that's fine. It's not a problem.
Yeah, I would just
Andreas,
add one thing because you said we're talking the Isomer book. I completely agree that the fund of fund landscape in Europe. So I think we probably all in all have less than 1 billion from fund of funds that are not sovereigns or the likes of VenCap that only do the very large firms and primarily US firms. So if you look at the likes of Isomer, AlphaQ, all the ones that we have, I that is less than 1 billion. So obviously that's not the way to go. But what I'm saying is that we have so many that are on fund one, fund two, where honestly, if you're not a sophisticated LP, and in the current market where the ones that are on fund three or four or five that have shown that they're probably like we know that for some reason venture is quite systematic. Once you've found your place in a quartile, you tend to stay there. So for that reason, I would just say that a non-sophisticated LP should put the majority of their capital in that type of investment to begin with, and then when you start to get to know venture more, that's where you should then build your own conviction in a young firm. And
Absolutely. For the same reasons that you should invest via managers in venture capital in general, right? You need diversification, you need access to the high quality deals, and firms that try to put together a portfolio of venture investments with, one person looking at direct investments, fund of funds. There's no chance. No, completely agree. So there's so much we can do, but that's also the opportunity. Yes, it's still a cottage industry, but I think that's the business opportunity for us that are in the ecosystem. Is there are all these opportunities we can go to develop, our franchises, our companies to target these gaps in the market.
I'm just surprised that we don't have more fund of funds and platforms that make venture accessible. It does surprise me every single day because we have so many LPs that would be, or potential LPs that would benefit from venture exposure, but need a helping hand in the beginning.
Folks need to be comfortable paying fees.
Yeah.
Yeah, I know folks need, if the starting point for everything is, I would like to get access to an asset class that pays me 25 to 30% IRR, but I don't want to pay another 1% to access the asset class.
Yeah. Very
right?
hard.
It's just like mathematically it doesn't make sense.
Yeah. But I'm
I'd rather
happy. But
take
I'm
seven
happy.
percent in a tracker than 30% and pay 1% more in
Yeah.
fees. It doesn't make
But I'm
sense.
happy to pay 200K for whatever manager that I have of my own assets.
Yeah.
I want to get political. So, Andreas, sticking with you, should European VCs be more involved in tech policy and politics? I saw yesterday, and we're not going to go into this, but I saw that the government have asked for feedback and directives from the industry on carried interest and capital gains and how it should be treated. So that's going to be interesting to see how that unfolds. But Andreas, where were you going with this? Should VCs get more involved in policy and politics?
Yeah, so this is so I strongly believe that they should. I think that VCs are in the game of thinking about the future, both in terms of long-term trends, but also in terms of where where the consumer is, even if you're like this is where you are, right? And tech, we know tech has never had as big of an impact on how people live their lives, how societies develop as it has today. So for that reason, it kind of like the people, even though we're small, even though it's just a very small industry, which basically wealthy white people very often, why should they ever have a big voice? That's the counter position that you could have to why should VCs have anything to say in the public discourse? Aren't they just capital allocators that put bets on small startups? You could definitely argue that, but what I just think is that VCs are all the time thinking about how the future will look like, how they're investing in the things that are making the future, that
Mm.
are severely impacting what the world will be like. So for that reason, I just feel that the VCs that we have in Europe should be more vocal. Um, and do we then want to have it end up as partisan as it is in the US? Ideally, we don't end up there. I don't think necessarily we will. I don't think we have. First of all, I think that if we do something on a pan-European scale, most matters are not very partisan. So for that reason, I do think that we will probably have a better dialogue if we are more active as VCs in the public discourse. Than they have in the US. I think not 90% of the population don't spend even 15 minutes per day thinking about AI. And I do think that we need the broader public to, as an example, think about the impact of AI.
One thing before I bring you in, Mads, one thing that I will contest in that is that technology has forever been the game changer since the Industrial Revolution. It just hasn't been democratized. We've got supercomputers in our pockets now. So I think technology is prevalent for the masses, but technology, I mean, from the steam engine has been the protagonist in the story. But Mads, over to you. What's your take?
There are lots to unpack. Um, I'd sort of maybe put it back to Andreas a little bit. I think, yeah, but you can't really open any social media platform without hearing sort of tech bros and VC bros espousing their views on the benefits of technology and AI and what that is going to do to create a bright new future.
Do you think
What are the what are some when you talk politics? I guess that for me ties to policy. I mean, are you sort of suggesting that we should be more vocal in articulating policy on different areas, I don't know, taxation, immigration? Is that where you're going, or is it something else completely?
so? First of all, let me just, with regards to, can you open any social media and then not see tech bros? Obviously, we cannot, right? Because we're well, our
We
algorithm,
are
our
them.
feed is full of our people. But I can definitely open up my wife's Instagram or my wife's feed on a news feed, and there won't be a single tech bro or
Mm,
VC articulating any views on anything. And that is where I think that what I'm arguing is that we should try and get outside of our own industry to maybe opine on some of the topics that are moving the needle for the broader society. Uh, when you're then asking us on what topics do I think that we need to be more activistic or more outspoken, this is where I am partly not as well versed as I would like to be, and I'm working on building out my thought here. As an example, with Benoit and the team behind EU AC, which is EU-ACC, so
Yeah.
Accelerate EU. Um, because I do think that there are topics that should bring us all together, where I think that we can move the needle. One of them is, as an example, AI that I mentioned just before. I think just in the education of how AI will impact, what we should be thinking about when considering it, and then comes the policy layer, and policy in tech and AI is obviously something that is harder to discuss in a broader environment. But for that reason, I think that there's one layer that is opining slash just educating slash talking about where the puck is moving. And then there's another layer which is working with the policymakers directly so that we can affect it more. I think that in the US, as an example, they have this now with A16Z talking about little tech. There is the agenda of little tech and big tech, and those are typically at odds with each other. And I think that we would do well in Europe if we had more speaking up for little tech, just as the
Well, we have no
point.
big tech in Europe, so we don't really have that problem. Tongue in cheek.
Yeah, we don't have that problem yet, Mads. We're working on it, baby.
There you go.
I mean, I know that Keith at Boardwave and Andreas Klinger and Benoit at EU.ac, there are movements now around affecting policy and getting more involved with government and regulation. So hopefully those movements will continue. But we'll see. But it feels like, I don't know if it's come so close to it, that's all I see, but it feels like there are now moves into how venture capital, how technology, how AI, and how this kind of technical revolution, we've been slow off the mark, but how the technical revolution is going to affect the broader economy and the average Joe and Julia. So I think my sense is that these kinds of venture capital getting more involved in policy and regulation is coming through. So running out of time, last up, I wanted to talk about founders either bootstrapping or going VC. So a bit of a founder focus. Andre Reterath, who is a fabulous data cruncher, brought up some figures recently from ChartMogul, which was looking at, do VC-backed companies outperform bootstrap companies? And looking at the chart, which I'll post, over the last 4 years, since Q1 20, it looks like both sets are slightly on the decline, but VC-backed generally outperforms bootstrap when it comes to growth. But Mads, maybe you can kick off. How should a founder thinking about, how should they think about going VC or bootstrapping, and where's the timelines, and what should they think about, and how should they think about staying solo or going for venture money?
I think it depends on the level of ambition. If you're trying to build a lifestyle business, you obviously shouldn't take venture capital. That's not a good idea. That's not what venture capital is for. If you're trying to build a global category leader, you must take venture capital. Yeah. And the answer, the reason is very simple, because if you don't, somebody else who's competing with you will, and they will beat you. And it's really that simple. I think it's sort of a simple 2x2.
Yeah, I think the only thing I'll say is that you can make a different choice at different times in your evolution for an early stage. So you might choose, we're just going to see how this goes. Could this be a venture scale thing? It's not a natural evolution, friends, family, angel, venture capital. There's no linear path through that.
I think once you've taken the first venture round, that's a one-way door, because the inexorable nature, the power law means that you have to go for gold. You have to go for global market dominance. If you don't get those outlier returns, somebody else will beat you. And the prize for being number 3 or 4 in an industry is nothing. Yeah. And then the venture dollars are lost. And so the deal you do with the devil being the investor, is once you're in, you're in. But up until that point, yes, absolutely. You can sort of choose, and you can think in which way do I want to go.
Gents, thank you so much. That is The Seed. It is the Friday the 9th of August, and we will see you next week.